Gentlemen, thanks for joining us today. Brent, we've seen a bounce today in some of the FANG names and some of the big tech names, but in general, a lot of selling there. How would you sort of, I guess, sum it up? Is this a buying opportunity right now?
You know, we think there's a selective buying opportunity. If you look at names like Facebook and Google now, trading, just north of 10 times EBITDA, we think they're pretty reasonable. We think Amazon's obviously clearly outperformed and has a great trajectory. I think there are two new initiatives around Amazon that investors are worried about, the rising postal rates and then the minimum wage hike, what that's going to do to expenses. But this has been a top-line driven story. But we're getting more questions from investors is, what's the next leg for Amazon given escalating costs? So I would say that they're not all created equal. Clearly, we think there's some great opportunities given some of the sell-off. We're still very bullish over the long haul on these big platforms. And I think you go back in the history of tech over the last 15 years, and it's paid to continue to add to the big platform names, stay away from some of the point solution names. So we still think that the playbook will continue to work going forward, and that many of these internet platforms will continue to be the right places to be over the long haul.
And Josh, there's been a lot of focus on these internet names, but we've certainly seen hardware and also semiconductors sell off this week. We get earnings season kicking off for tech next week with IBM, Netflix, a number of others. How should we think about the hardware side?
Yeah, so I think that's interesting, Morgan. To that end, I did catch up with RBC's Amit Daryanani, smart tech analyst that you guys know very well. And we did talk about some of those trends because tech investors watching this know they're just about to head right into the teeth of earnings season. And the truth is, Amit's opinion is that the trends actually are kind of mixed here, at least digging down into the hardware. And his opinion, just looking at the subsectors, PC, server, networking are strong. He continues to recommend HP and IBM, which reports next week. He also remains bulled up on Apple. As for the chips, that's a really interesting conversation, too. If you look at the SMH today, that's higher. AMD, NVIDIA, both moving higher. On that space, I did check in with B. Riley's Craig Ellis. He's covered the chips for a long time. Certainly some conflicting cross currents there. The demand picture is mixed, Craig thinks. PC, server strong. Smartphone, at least broadly, underwhelming. And he told me, he's fielding calls from investors this week after that sell-off, and some of them were asking him, what looks oversold. And in his opinion, it's tough because even as you moved into earnings season, you do have these big, broad questions that we're still dealing with about trade tensions, about tariffs. If those worsen, Craig's point to me was there's actually no name in his coverage universe that he would consider immune there. So he's actually telling chip investors, equipment companies, if you want to play that, in his opinion right now, you actually still look for those companies that pay you a dividend and that pay you to wait through this period of transition. So he likes Intel, Lam, and TI, just some of the names he's recommending, Morgan.
Yeah, Brent, one of the big overarching debates in tech right now regards cyclicality, even in sectors where it just looks like there's tons of runway, social, cloud, and a bunch of others. Chips aside, I wonder how much validity you put into that argument.
I mean, I think we go through cycles inside tech. We've seen the movement this year. Software has massively outperformed. Internet's been a little weaker. We've seen a movement in and out of semis back into software. So I think, software, which is a sector we cover with our colleagues, has been the lead. You look at Anaplan this morning, the success of that launch. We continue to believe that has the strongest sentiment. And we think that these, overall, we think the overall software internet sector still will remain one of the go-to sectors, has been. And there's pockets of strength in each of these sectors. Even networking has massively outperformed even many of the internet names this year. So tech in general has been pretty good, but we see these ebbs and flows that are happening. We continue to hold to, in internet, you have to own the big platforms. Betting on number 2 or number 3 is not a good idea. In software, we continue to see a strategy of owning a lot of the names across the different subsectors, and that strategy has worked. So it works for different sectors inside tech.
Brent, I wonder, are we factoring in, or are investors factoring in enough a potential negative drag from the rest of the world, outside of North America? I mean, we talk about these companies on the one hand as global companies, and we talk about how well the U.S. stock market is doing. We're entering earnings season. We've got a relatively strong dollar. You've got markets that have diverged, the U.S. versus rest of the world. Are we going to see an impact on demand from some of the international markets for some of these tech companies that are expected to deliver decent growth numbers across the board?
Yeah, I think it's possible. Obviously, GDPR in Europe has been an overhang for a lot of the internet names. I think we've seen pretty good demand in Asia, outside China. Obviously, China hasn't been a big follow through, but we're seeing pockets of strength even for a company like Adobe, who's now selling software in China as a cloud service. You can't pirate the cloud, so Adobe's actually seen a nice move as it relates to what's happening in China. But we believe right now overall global demand is very good. We have not seen a major decay. If you look at even Twitter's international business is outpacing the U.S. business. So I think there's clearly been strength in Twitter's business internationally, and we're looking for a reacceleration in the U.S. business in the back half of the year for Twitter. So overall, it's been really good, and I think that's what's worrying investors right now is demand's been so great, stocks have moved hard, multiples have gone up, and where do we go from here? And I think clearly the market's digesting now. We're going to see a little bit of a slowdown. Both Benioff at Salesforce and the CEO of Intuit at their last analyst day highlighted a potential slowdown going next year. So you're seeing big CEOs of major tech companies actually start to say we're about to hit the air brakes. We don't necessarily think we come to a screaming halt, but we do think growth is going to start to moderate and slow, and that will impact multiples.